right, good afternoon, everyone. Thank you all so much for taking the time to join us today. My name is Mark Bolger. I'm the Agent Care Specialist for the Life, Annuity, Final Expense, and Long-Term Care. In today's webinar presentation, we're going to be going back to the basics, just kind of doing a little life insurance 101, just to kind of refresh your memory, or for anybody that's new to life insurance, just kind of once you understand the basics and the foundation of how these life insurance policies work, it's going to be that much easier for you to explain it to your prospects and any existing clients. So before we get started here, just wanted to announce Pinnacle Financial Services. We are doing our Pinnacle Championship Series. This year it's going to be down in Orlando at the Kia Center, which is where the Orlando Magic play. It's going to be on Thursday, September 18th. This is going to be like our fourth championship series presentation that we're doing. We had such great success last year. We went up to the Meadowlands to the New York Giants Stadium. We went down to Nashville to the Titans Stadium, and we also went to the Philly Stadium here in Philadelphia. So had well over 100 agents attend. It's completely free for anybody to attend, regardless if you are contracted with Pinnacle. So anybody that is interested in coming, it's going to be a full day event. Again, Thursday, September 18th in Orlando, Florida. We're going to have all sorts of carrier reps. We have some keynote speakers, and it's just really just a great way to to introduce yourself to local carrier reps, meet the Pinnacle team. And just really, learn a lot. We have educational seminars, all sorts of stuff going on that day. So anyone who would like to register, you can go to our website, pfsinsurance.com/PCS. Okay, that's Pinnacle Championship Series is what that stands for. And you can go on and you can register, and you'll get alerts, notifications as we get closer to the event. Obviously, we're still finalizing some speakers and some different things that we're going to offer for the event. But just wanted to get that out there before we get started to let everybody know. Okay. So also before we get started, I see that I got a couple questions coming in. Somebody's saying that Marty's saying that the speaker quality isn't good. Marty, I got my volume all the way up, so hopefully if it's not just your computer or whatever, I can send you a copy of this afterwards. But anyway, so if you do have questions, try and type them into the chat box, and we'll get to you. By the end of the presentation, we'll address those. All right, so let's get into the meat and potatoes here. So again, we're going to go back to the basics here. What exactly is life insurance? So some of the key points here. Basically, life insurance is a contract between the client, who's the policyholder, and the insurance company, obviously. Client pays the premiums, and in exchange, the insurer or the insurance company, they promise to pay a lump sum, which is called the death benefit, to your chosen beneficiaries upon death. It's not about if you die, but when you die. So being able to set somebody up for financial security at that time is very, very imperative. Think of it as a financial safety net for your loved ones. Obviously, if you pass away, there's going to be some needs for, income needs or, some sort of protection. So again, just going to pay out that death benefit to the beneficiary. Okay. Why is life insurance important? Now, this is specifically for individuals. So families or, individual clients that you're meeting with. Couple different things that you could talk about. Income replacement. So life insurance is a great tool to have, God forbid if the breadwinner passes away, there's a loss of that income, right? So this can count as income replacement. So if you get a $500,000 death benefit and the breadwinner passes away, that $500,000 is going to the beneficiary, who can then, doesn't have to adjust their lifestyle. Like they don't need to downsize, sell the house or anything like that. You want to keep them as comfortable as possible. So that's definitely one of the big ones. Income replacement, which is what it comes for. Debt coverage. So life insurance can cover any outstanding debts. Mortgages are very popular, a very big reason why people buy this. They might have a $500,000 house. God forbid if they pass away, if they have a $500,000 death benefit, we can ensure that that family, again, doesn't have to move out of the house or sell it or anything. They can continue their way of life, right? Leaving a legacy. It's a great way to build wealth, okay? Allows you to leave financial gift to loved ones, or you can actually leave this to a charity. That's totally fine as well. But the main thing is it's a tax-free death benefit that is left to the beneficiary. So again, if it's $500,000, that's how much they're getting. There's no tax on that whatsoever. So it's just another important reason. Any future expenses, so can help provide funds for future expenses like children's education or long-term care for a surviving spouse. Again, you can use this money for anything that you want. It's not, if a beneficiary, gets a death benefit, it's really up to them. They don't have to use it just for specific things. So it's very, very flexible. Estate planning is another great reason why people buy life insurance. It can help pay for those funeral costs, estate taxes, other admin expenses at the end of life. If any of you have a family member that you've had to assist with this, you can definitely understand why the life insurance would make things so much easier at that time. And then lastly, peace of mind. Knowing that your family is going to be financially protected can certainly help you sleep at night. Not have to worry about planning or what if I don't have enough money. Hey, this is something that will definitely give you that peace of mind. I'm going to switch gears. So why is life insurance important? And this is for businesses. And this is just like another avenue that a lot of agents don't realize that that life insurance can be something that you could sell to a business owner. A lot of people that are self-employed or they own their own business, this is a perfect situation for how the life insurance could benefit them. So the first one is key person insurance. So, most companies, you're going to have a person whose skills are vital to the success of the company. Maybe it's like your right-hand man. So God forbid if anything were to happen to him, you want to make sure that, your company is not going to suffer, any financial losses. So what this does is it allows the business to be the payer, the owner, and the beneficiary of the policy. So in the event that that key employee does pass away, the business will receive a death benefit for, let's say, maybe $1 million, however much that they want to do. But what that does is now the business has $1 million that they can go and maybe hire somebody that that has the equal expertise as the person who passed away, or it just gives them enough time to interview new candidates. Obviously you're not going to get somebody within a couple days of the person passing. Sometimes it could be 6 months or a year before you finally interview somebody that can fill that position. So that's just going to help prevent the business from having to close down or having to affect their their day-to-day operations. So definitely a big positive for that. Buy-sell agreements. This is another reason why businesses would purchase life insurance. So whether your clients, if they own a large company or if it's a small family-operated business, the success of any business includes smart strategy and planning. Buy-sell plans actually have two parts. They have the legal plan that's written up by their attorney, and then the funding portion. So one popular funding source is to use life insurance policy to fund the buyout. So basically what this means is, let's say you and your best friend, you started a company and, both of you own 50% share in the company. And God forbid if one of the owners were to pass away, well, what's going to happen with his ownership in the company? And, is anything going to get paid out to the spouses? All that stuff can be set up through these buy-sell agreements. Another example could be maybe there's multiple owners. Maybe two employees own 40% and then they have somebody else that owns 20%. Again, these buy-sell agreements can be a great tool to to ensure that the family members as well as the business are protected. And then lastly, an executive bonus. So this is something where let's see, the company would be the owner, and they could put this out for any key employees, but basically it's going to be something that's going to accumulate cash value so that they can keep that employee with their company. So it's, if he gets any other offers from another company, they're not going to be able to match what they've been putting in a cash value life insurance fund, right? So, and at the end of the year, the companies, have the option to take some of that cash value and give the employee, a yearly bonus or, a bonus every 3 years, however they want to do it. This is something that can ensure that that employee is going to stay with the company as well as, get some sort of, nice executive bonus that is going to be extremely powerful for keeping them there. Okay, so next we're going to go on. A lot of times people say, okay, I know what life insurance is, but how do I know, or what do I tell my client, like how much do they need, right? Or how do they assess how much life insurance they're going to need? So based on those factors to consider, like income replacement, maybe they have, maybe they currently, took out a mortgage a few years ago. So in the event of death, that's definitely going to be something that they want to make sure that they can cover. So what, depending on the amount of the mortgage, if it's $500,000, you at least want to make sure that you get, $500,000 minimum in order to cover that in the event of death. Outstanding debts, again, if they have the mortgage, if they have any loans, credit card balances, all that stuff, you can kind of add up to say, hey, we at least need to be able to make sure that in the event of death, that your death benefit's going to cover all of these debts and things that are outstanding. Future expenses such as education, child care, long-term care, these are factors to think in as well. So if you have a client that's maybe in their 30s or 40s, they're not necessarily thinking about long-term care or retirement necessarily. However, we could put them into something that's permanent, that's going to last the rest of their life. So that you want to make sure that, if they're in their 30s now, but, they have this for the rest of their life. Let's say when they're in their 70s, they might need some sort of long-term care. We're going to have that built into the policy, okay? Funeral costs, so small final expense plans. If this is all that the clients have a concern about, then we have small final expense plans where they can get 10, 15, 20,000 just to cover the cost of a funeral. Maybe that client at that time already has their house and expenses all paid up, and they're just really concerned about somebody not leaving the burden for their beneficiaries or their family members to have to pay for the funeral. Current savings and assets, so what resources are already available. Maybe they have some money that's tied up in their savings, or they have significant assets. That's something that you want to make sure that we get enough coverage to protect those assets in the event of death, obviously. And rule of thumb, just as a starting point, so if you're not really sure, and if your client is just kind of like, doesn't really have too much that's outstanding or too much to cover, a good starting point is 5 to 10 times of the client's annual income. So if they're making $50,000 a year, anywhere from $250,000 to $500,000 would be a good rule of thumb as a place to start. Now, based on these factors, so how much life insurance do you need? I've actually attached a handout to this webinar that you guys can download. It's actually a needs analysis finder, and it looks something like this. And this is a way for you to collect and basically just jot down your client's expenses and kind of fill out this worksheet to get an idea of, hey, how much insurance do we need to get this person? Is 100,000 enough, or geez, do we need to go upwards of $1 million? This simple one-page form will help you and the client determine how much coverage you need. So that is attached for you guys to download right on the GoToWebinar program there. Okay. Now, some of the factors that are going to affect the premiums. So this is obviously, if it's a preferred risk class or a standard risk class, or if it's a table rating. All of these things here are going to affect that. So number one, the age. We all know that the younger individuals typically going to pay lower premiums. The health, meaning that their medical history and current health status are certainly significant factors. We want to make sure that the clients don't have any, chronic illnesses or terminal illness. Certain things are, absolute declines right away. So if you know that your client, definitely has some health issues and they're looking for a lot of life insurance, that can be something that, that could certainly be an issue. And at that point, I would say maybe let's try and go on with the spouse or another family member that you could try and get the insurance on, just in case that client does have some health issues. Their lifestyle, are they a smoker? They have high risk hobbies such as skydiving or hang gliding. Those things are going to be will affect the premium. The gender, so women generally are going to have longer life expectancies, so you're always going to see the women premiums are going to be a little bit lower than the males. The coverage amount, something that you got to consider. So higher death benefits means higher premiums, obviously. And also to kind of go along with that is sometimes the higher the death benefit, that means like it's like guaranteed, has to do like a medical exam. Whereas if the death benefits are within a certain range, like usually anything less than 100,000 would be a true non-medical type of plan. The policy type. So are they looking for something that's permanent? That's going to last the rest of their life, so they don't have to worry about this anymore. That's great. That's certainly something that I would recommend for everybody, is try and get a permanent life insurance. However, because it's permanent, generally going to have a lot higher premiums. So, we want to make sure that it's something that they can afford. Term life, as you guys know, or if you haven't seen before, term life have very inexpensive premiums for much higher death benefit amounts. The only thing with term life that we'll go over in a few minutes is it's going to end. They're only going to go out for 10, 20, or 30 years. So you don't want to put your client into a term plan without having something else to back that up. For example, if they're a 30-year-old client, you get them a 30-year term. When they're 60 years old, that coverage expired. So, they're most likely still going to live like another, 20, 30 years, hopefully. So you want to make sure that if they do get a term policy, that it's convertible to a permanent policy. Or if we get them maybe a combination of both, that's certainly something that we can do. Or if they're just going the permanent route, we want to make sure that it's something that's going to do them well in the long run as well. And we can certainly help you design those types of cases. You can always contact us here at Pinnacle, give us the specs on your client, and we can always come back to you with a couple options for them. Lastly, policy features or any riders. So let's say if you're adding a long-term care rider to a life insurance plan, that's going to increase the cost of those premiums. Same thing with like an accidental death benefit rider or a waiver of premium. All that stuff is going to increase the cost. Choosing beneficiaries. This is something that is overlooked a lot, but it's very important, for you, the agents, to be able to educate your clients on knowing like who can actually qualify to be a beneficiary. So they must have an insurable interest, and that means that are they a spouse, are they a child, or are they a close family member, such as an aunt or an uncle. Sometimes cousins are allowed, sometimes not, but you definitely want to make sure that they have an insurable interest. A trust is another thing. So sometimes clients have a trust set up. That's totally fine. It's in their name, so that shows the insurable interest. Things that don't have insurable interest: your neighbor, your best friend, the guy down the street who comes and helps you out a few times a day. I've seen these policies come through with people leaving their friends, or somebody that doesn't have an insurable interest, even though they are in their lives a lot. And I come across this sometimes with elderly clients that don't really have any family members around, but their neighbor helps them with with their daily living activities and so forth. unfortunately, in that case, we cannot still leave it to a friend, even if you call them a cousin or an uncle. So just keep that in mind. You can also name multiple beneficiaries. So it doesn't have to be one person. A lot of times people say, well, what if this one person, gets this $500,000 death benefit? I don't want them to have to spend the money all themselves. Okay, well, if you're worried about that, split it up. Put a couple people on there. As long as the amount equals 100%, you can certainly do that. It's also important to keep your beneficiary designations up to date, especially after any major life events like marriage, divorce, birth of a child. I can't tell you how many times agents will send me, copies of clients' policies that they bought 20 years ago that they have listed like their ex-spouse, or they have their, somebody on there that's either no longer living. This is something that you as the agent is a great way to, follow up with any of your clients on a yearly basis or semi-annual basis. Just kind of touch base. Hey, any major life events happen? I know you were talking about, having a kid soon. Are you guys expecting? These types of questions are something that, you can certainly update their beneficiaries at any time if they have an active life insurance policy. So always important to keep that up to date. You don't want that money going out to somebody that was important in your life but is not right now. Okay. You can also name contingent beneficiaries in case the primary beneficiary is deceased. So those contingents, in the event that those primary beneficiary or multiple primary beneficiaries have passed, they will automatically pay out the benefit to a contingent beneficiary. Okay. So next is the application process, and obviously I'm not going to go through all that like through the Pinnacle website, but this is, after you've collected this information from your clients, you've decided what type of plan might be the best for them. Now is the application process. And essentially what that is you take the application. Most of these, we have a simple 2-page drop ticket, which I have actually added to the webinar. So this is downloadable for all of you guys. You'll see it's just 2 pages, and it's just collecting basic information on your client, their name, their address, their phone number, their annual income, their occupation, the carrier that we're applying for, their banking information. It's asking if they have any existing life insurance, and if they want to replace that, yes or no. Second page here is going to ask about the policy owner, and then just the primary and contingent beneficiaries. So that's all that we need for the application if you're not going to go and do an e-app on your own. So you would just fill this out. It's totally fillable PDF, so you can email it to your clients, or you can collect this information over the phone. Once you have this complete, you can email it to us at lifesales@pfsinsurance.com, and we will take that drop ticket application. We'll submit it to whichever carrier, and the carrier is going to go and they're going to contact your client within 24 hours, and they're going to go through the next steps. If they need to order a medical exam, they'll tell them over the phone. And basically, those next parts that the insurance company is going to do is this medical questionnaire, where they're going to ask a couple of yes/no health questions just about their recent health history. If the product requires a medical exam, that's where the carrier is going to notify the client saying, hey, due to your age or due to results that were found in your MIB, we need to order a medical exam, and they'll go ahead and do that right then and there. Once the medical exam is complete or the questionnaire is complete, everything is now sent to the underwriting division of that particular carrier. So that's where they're going to go back and they're going to assess the risk, and they're going to see what the results were of the medical exam. Or if there's no medical exam, they're going to go off the questionnaire that you filled out, and they're going to run that against the MIB prescription history report just to make sure that everything jives up. After the underwriting process, then we get to the policy issuance. So if it's approved, client's going to receive their policy documents usually via email, or if they choose for them to like a hard copy, they'll get them in the mail. Same thing with the agent. If there's any delivery requirements, That'll all be sent to the agent as soon as the policy is issued. Okay. And then lastly, as soon as they make the first premium payment, that's right when their coverage begins. Sometimes, depending on the product, they pay the premium right when they take the application, or if it's something that's fully underwritten, they can pay for conditional coverage, or we have options where, the clients don't pay until the policy is approved and issued. So that's why we have it there as like the last part. So, and again, too, the premiums, as soon as that first premium payment is received by the insurance carrier, your commissions are paid out that same day. So we always have agents calling saying, hey, are my commissions ready yet? And we'll look at the policy and say, oh, it's not effective till June 1st. So that's, that first premium payment is going to come out in another 2 weeks, and then you'll receive your commissions. Okay. So some of the key takeaways, from this, life insurance provides obviously crucial financial protection. You can understand, or we're going to understand the differences between the term and permanent life. I have that on the next couple slides. Helps you determine the coverage needs based on the client's individual circumstances. Some other things, be honest and thorough during the application process. This is more for the client. And obviously make sure to review your policy and beneficiary designations periodically. So just want to let them know, once you send this over to the company, that's not set in stone. We can leave it if we don't call them, but obviously your beneficiaries could change throughout your life, and just to kind of keep that in mind, as time goes on. All right, so the types of life insurance that you can sell under Pinnacle Financial Services. So these are all the different types that we offer if you are contracted with Pinnacle. So the first one is term life insurance. Again, this is temporary coverage. Most of these are fully underwritten with a medical exam. We do have the simplified life insurance at the bottom here, which I'll talk about. Those are the non-medical terms. We'll get to that in a second. We also offer traditional whole life insurance. So this is separate from final expense. Final expense is just small whole life policies, usually up to about $50,000. But for anybody that wants whole life that's over $50,000, we consider that traditional whole life. Basically, what it is it's permanent lifetime coverage. Usually, it's going to require a medical exam with full underwriting because the death benefits are going to be so large. And the whole life policies are going to accumulate guaranteed cash value at an interest rate of roughly 4%. Okay, so guaranteed cash value accumulation, as well as a guaranteed death benefit that'll last to age 121. All right, next we have the universal life insurance. So this is a little bit more of a modern version of whole life. They offer a little bit of flexibility as far as the premium payments, some flexibility with the lifetime coverage, meaning that your death benefit, we could set it so that it increases every single year, right? Also, the universal life is going to include indexed universal life, which is the IUL, very, very popular plans. The other type of universal life is a GUL, which is guaranteed universal life. The GUL is just a permanent death benefit, does not accumulate cash value, so it is a little bit cheaper because it doesn't accumulate cash value. But the other one is the indexed universal life, the IUL. That does build cash value just like the whole life, except it's got flexible interest crediting rates. So depending on the performance of the market, so if the market has an overall positive year, the cash value is going to get credited to whatever that amount is. It could be anywhere from as low as 1% to usually a cap of 11 or 12%. Okay. Now, with the IULs, if the market has a negative year, your clients are not losing any of their money. They're just going to get credited the minimum amount of about 1%. But if the market has a year where they're 25% in the positive, your clients can get credited around 12%, which is around the cap. So anywhere from 1 to 12% is what that cash value accumulation will be with the IULs. And the way that we do that is we base that off of the last 20 years of the historical performance so that we can kind of estimate what the next 20 years are going to look like. So a lot of times those are going to perform a lot better than a whole life policy, but it's not going to have that guarantee of 4% year after year after year. Okay, it can be anywhere from 1 to 12%. Okay. Next up, we have the final expense life insurance. This is very popular, especially for Medicare agents. It's a great way to go back to your client after you've offered them, let's say, an Advantage plan or a Medicare supplement plan, and you can offer them, this simplified final expense coverage. It's going to last the rest of their life. It is absolutely no medical exam for final expense since they're such small death benefit amounts. As I mentioned earlier, they go from as little as like $2,000 up to $50,000 for the death benefit. So all of them are going to be, simplified or guaranteed issue. Simplified just means it's a couple yes/no health questions, and that's going to help determine if they get the preferred or a standard or a graded plan or a guaranteed issue plan. If you know that your client has health issues, you definitely want to go with a guaranteed issue plan. There's no health questions. Your clients are automatically accepted regardless of their health. Like they could currently have cancer or multiple health issues that are declinable elsewhere. This is your last choice where we can guarantee them some sort of coverage. Okay, it's always going to have a limited death benefit for the first 2 years. That kind of offsets the no underwriting questions, but it is something that we can get people that currently are uninsurable with health questions or with health issues. Next, we have the simplified issue life insurance. So this is similar to the final expense in that it's the yes/no health questions, but we can go up a little bit higher with the death benefit amount. So a non-medical term, we have a couple carriers like Mutual of Omaha with their Term Life Express, Foresters, and let's see, there's a handful of other ones that we have. But the thing with these non-medical term plans, they're going to be a little bit more expensive because of the non-medical underwriting, and they're going to have limits to usually around $300,000 or $400,000. So it's not going to be ideal for a client that's looking for $2 million. It does have some limitations. We also have some non-medical UL or IUL plans. Same thing, they're going to have limits up to like $300,000. And then we do have some small non-medical whole life plans that might go up to, let's say, like, between 50 and 100,000 that are available. Again, all they have to do is answer maybe 15 to 20 yes/no health questions. A lot of times with these, if you're doing an EAP, there's an instant decision, regardless if you're doing term or an IUL or final expense. So you don't have to wait a couple days to find out if they've been approved or not. You'll know right then and there when you're doing the EAP. And then lastly is the guaranteed issue. I was just talking about this with the no underwriting, no medical exam. Clients are guaranteed acceptance regardless of their health. Okay. Kind of already went over this a little bit, so let me just skip ahead. So the types of life insurance, this is the term life, which we were talking about. These are just a few examples of some of the carriers or some of our top carriers that offer term. We have probably over 50-something life and annuity carriers, so I wasn't going to list every one of them on here, but most of you do have appointments with one or more of these companies. So if you are looking for like one of the top plans to go with, I would certainly suggest any of these 5 companies that you see here. Just to expand a little bit more on the term insurance, some key points: provides coverage for a specific period. Remember, it's like renting coverage. It's going to expire at some point. Typically, it's 10, 15, 20, 25, or 30 years are the options. It's often way more affordable than permanent life for the same coverage amount. Again, if the insured passes away within that term period, that death benefit is paid. If the term expires and the insured is still living, then the coverage will cease. So if somebody has a 10-year term for $100,000, 10 years pass, we're in year 11, now that coverage has ceased. Okay. Now, all of these term policies that we offer here through Pinnacle, and pretty much any term policy out there, is going to have what's called conversion options, meaning that at the end of the term period, they can automatically convert this to a permanent product with that insurance company that they have the term with. And usually the only thing the client has to do is they have to contact the insurance company before that term period expires, and the insurance company will give them some options as far as, how their coverage can be continued. Usually it's going to be, for the same price that they're paying for the term, but they're going to get a lot less of a death benefit. Okay. And any term policies, they're not going to accumulate cash value. Again, you're renting the coverage for a specific amount of time, so it just has that death benefit in there. And again, the analogy, renting an apartment, you pay for coverage during a specific period. Obviously, once that period is over, then that coverage will cease. So it's good for covering temporary needs like mortgage payments or child rearing years. If you have younger clients that are in their 20s, 30s, or 40s, they should all absolutely have like a 30-year term. For example, if we had somebody that's like 40 years old for a 30-year term for $500,000, it's probably going to be with like less than $100 per month. So it's very affordable and absolutely necessary, especially when clients are younger and healthy. The next type are the universal life and the whole life, just expanding a little bit more on that. Again, regardless if you get an IUL, a GUL, final expense, or traditional whole life, these are permanent lifelong coverage. So as long as you're paying those premiums, you are never going to outlive the policy. You'll have a guaranteed death benefit of something, okay? These are going to build cash value over time, and that's on a tax-deferred basis. So this is why these IULs are very popular, because they're going to accumulate cash value, and you can take out tax-free what's called a policy loan for however much is accumulated in your cash value at any given year. Okay, so that's very big, with the tax purposes. Again, these are all tax-free death benefits as well, so it definitely has those advantages. I said this earlier, but the premiums are generally going to be higher than the term life for the same initial coverage, again, because these are permanent, they're going to last the rest of your life. So the analogy, this is like owning a home as opposed to renting a home. So it's a long-term asset that's going to grow in value. And what grows in value is that cash value. Each year that accumulates more and more and more, compound interest after 10, 20 years, it just keeps going and going and going. And again, the types of permanent life that we offer: whole life, final expense, universal life, indexed universal life. Variable life we do not offer, but these are some available plans that are out there. Variable universal life, we do not offer these through Pinnacle. These require you to have a securities license. And basically the variable plans, they are susceptible to market volatility. So that's why we don't offer them here. They can certainly, accumulate much better cash value than a regular IUL, but they can also lose money if the market goes down. So we don't want to put anybody in that position. We only offer the ones where they can only gain when the market does well, and they don't lose anything if the market performs negatively. Okay. So another thing that I attached to this webinar is a client fact finder, and it's just a simple one-pager just for you to collect information about your client. It asks you, maybe if they have any health issues, so you can check off any of these health issues that they may or may not have. And then what you can do is you can send this back to Pinnacle at lifesales@pfsinsurance.com. We'll get back to you in the same day and say, hey, this fact finder you sent in for, Joe Smith, based on him having, COPD and, one or two other health issues, we can really only get him maybe a final expense plan. There's no term that's going to cover him based on that health issue. And then we'll come back with like 2 or 3 options for you. So this way you don't have to, collect information on your client and then turn around and have to go research, what's going to be the best option for this person. Now, you can have a 5-minute call with the client, take this information, email it to Pinnacle, say, hey, here's a fact finder. Let me know what options are available. We'll get back to you in the same day. This way you can move on to the next client and not have to worry about wasting time going and having to research. Okay. Quoting life insurance. So we have tons of webinars that we've done specifically on quoting the life. I was going to go into this, but that was going to make this presentation much longer. But basically, you can access the Pinnacle website, pfsinsurance.com, and you can run quotes for final expense, term life, and guaranteed universal life right through our website. So up here is what the final expense quoting software looks like. Just put in a couple little bit of information, and you'll be able to see what carriers populate. And then for term and guaranteed universal life, you can fill in this little quoting software on our website, in order to run quotes. For indexed universal life and traditional life, please reach out to us here at Pinnacle. You could send us a fact finder. You could give us a call or shoot us an email saying, hey, my client is 45 years old, looking for an IUL. And the reason why we have separate software, whether through the carriers or through like WinFlex, that we can run those IULs and traditional whole life for. We don't have the ability to put that into the Pinnacle site because there's so many different variables that it has to go off of. So just send that request over to us. We'll get back to you in the same day. We'll run that illustration, show you what the cash values look like, and send it back to you. And we can always do like a screen share one-on-one to kind of go over why we came up with those quotes and what the quotes mean, how to read them, et cetera, et cetera. Okay, so again, shifting gears a little bit to the sales process. So like we talked about before, when you're first meeting your clients, you want to do the fact finding, which we have in here. But initially, so if you're prospecting right away, finding potential clients, this can involve the networking, referrals, online leads, community events. A lot of times, agents that are new to selling life insurance, they say, well, I need to find leads, or I need to buy leads. And that's totally fine. But a lot of times it's like they might already have potential clients, which are their existing clients that they've sold Medicare to. These are great people to go back and let them know that now you offer all types of life insurance, including final expense. And you'd be so surprised at how many doors that opens up, not only for writing your existing clients, but also referrals that come out of that. A lot of times, your clients know that you sell Medicare, but when you let them know that you offer life, they're going to know that as well, and they're not going to only send over Medicare prospects for you, but people that need life insurance. And this could be family members, their children, grandchildren, all that kind of stuff. So with the initial contact, when you reach out to the prospect and you set up a meeting, whether it's virtual or in person, the goal is to obviously make a good first impression, briefly explain how you can help, and then we go to that fact finder, that one pager that was on the previous page, and that you can download right from this. And that's where you're just going to ask a couple, you're going to collect their information, and based on what you're finding from them, you're going to let them know, like, hey, I'm going to reach out to my team, who's us at Pinnacle, to come up with the top, 2 or 3 solutions for you, Mrs. Jones, and we'll get that stuff back to you. The next is the needs analysis. This is another thing, like I said, that I've attached to this webinar, where you can collect, how much they're paying for their mortgage and any other debts, so that we can assess how much coverage we need to get that client. Okay. Once you have that needs analysis and the fact finder completed, and you can totally send this back to Pinnacle, because this is what we do. We go on and we quote, and we look, to find the best application for the client or the best carrier. But if you're doing this yourself after going through us a couple times, you'll start to get the hang of it. So after collecting that needs analysis, you can go right into the quoting and right into the e-app. And this is just a sample of our term life quoting software here. You can see those prices, $18, $20, $20, very inexpensive. And you could essentially quote them and, kind of go with whatever has the best price, click apply, start the e-app right then and there. And then that's where the underwriting and the policy issuance is going to happen at the carrier. Once the client is approved, you, the agent, are going to get, a copy of the policy to deliver to the client. Most of these are electronic these days. I usually say, like, before COVID, it was very popular for agents to get these in the mail and have to go out and get a delivery receipt signed by the client. You really don't have to do that much anymore. But it is always good to, follow up with the client after they've, been approved and everything, congratulate them, thank them for your business, et cetera. And then just ongoing service and follow up. There's not much that you have to do as far as like checking in with your client in a couple months to see if their policy's okay. It's like, hey, as long as they're paying premiums, there's nothing that they have to worry about. There's no adjustments that you have to make. However, it is good to follow up with them, maybe every 6 months or a year, just to see if, if any changes have happened. Maybe, like I was talking about before, maybe they got divorced and we need to update their beneficiary so that the ex-wife isn't getting all the the death benefit, or maybe they had a grandchild and they want to add him as a beneficiary. Whatever the situation is, you'll be able to, to help them through that follow-up and ongoing service. All right. Now, lastly here, and I appreciate everybody for taking the time. I know it's a lot of information, but it's very, 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 very valuable. And my last part here is just some of the common objections that you're going to get from clients and just really how to overcome them. Everybody that's on or has registered for this webinar, you're going to get a copy of all these slides that I went over, as well as the attachments here. So there's a lot of great information for you guys to have, and don't feel like you have to memorize all of this right here and now. So one of the common objections, it's too expensive. Oh, we hear that all the time. Okay, great. Well, a great rebuttal for that is, hey, I understand the cost is a consideration. However, we can explore different coverage amounts and policy types to find something that fits your budget. Okay, so in that case, yeah, like if we're quoting them $300,000 and they say it's too expensive, okay, well, let me bring that down to $250,000. Those are some things that we can do. Or maybe if you're quoting them a permanent policy and it's way too expensive and they're not getting as much death benefit as they can afford, hey, let's try a term policy. Remember, those are a lot less expensive. We can get a higher death benefit amount, and that would certainly be an option that would most likely fit within their budget. Okay. Number two, I don't need it right now. I'm young and healthy. That's awesome. So I always say, oh, so you have a crystal ball? Can I get that? Because they apparently know the future, right? So a rebuttal to that is, that's great to hear. Now is actually the best time to get coverage because you're young and healthy, because you'll likely qualify for the best rates, and those rates are going to be locked in for life. Okay. I had an agent a few weeks ago send me a policy that their client bought 35 years ago, and they were paying like $82 a month, and it's like $1 million, IUL that has built up significant cash value, and they're paying less than $100 a month. That is something that you want to tell this client, right? Also, hey, they could certainly come down with some sort of diagnosis tomorrow that now makes them uninsurable. So these are reasons why it's like, look, you're healthy. Now is absolutely the time to do this. Okay. Number three, I need to think about it. Let me talk to my spouse, my partner. That happens all the time. I get agents calling me back saying, well, they're going to call me once they talk to their husband. Okay. Now, a great rebuttal for that is, hey, I completely understand. It's an important decision. What specific questions or concerns do you have that you'd like to discuss further before you make a decision or talk with your spouse? Perhaps we can address those right now. If your spouse or partner has questions, I'd be happy to include them in our conversation, as it's important that everyone feels comfortable with the decision. So what time would be best to have a quick call together? Okay, that's an excellent rebuttal to that objection there. Number four, I already have life insurance through work. This one happens all the time. That's a great start. Employer provided life insurance is a valuable benefit. However, it is often tied to your employment. So what happens if you change jobs, or if you retire, or God forbid if you get fired? You could lose that coverage. Also, the amount of coverage, it may not be sufficient to meet your family's long-term needs. A lot of times if a company has a group life insurance plan, it's usually a set number. It might be $100,000. And regardless of the salaries of the employees there. So, 100,000 might be okay for some people in the company, but not for maybe some of the executives, right? So that's certainly something that, is is something that they're most likely going to lose if they leave, retire, or get fired. So all the reason for them to go and get coverage with you right now. Number 5, can you just send me some information? Oh yeah, we get that all the time. Of course, I can send you some general information. However, the insurance isn't a one-size-fits-all product. Ain't that the truth? To ensure you get information that's truly relevant to your specific needs and goals, it would be more helpful to have a brief conversation to understand your situation better. That way I can provide you with a tailored, customized quote that answer any questions that you might have up front. So would you have 10, 15 minutes sometime this week for a quick chat? Great rebuttal. And I always tell agents, even clients, I say, they always call, what's the best life insurance product? Well, that depends on your client. Everybody's different. Everybody has different needs, different health issues, different concerns, et cetera, et cetera. So one life insurance company might be the best for this person, but it may not be the best for this other person, okay? It all depends. Number 6, I have other financial priorities right now. Say, okay, that's great. I understand that there are many financial demands. However, life insurance can actually be a crucial part of a solid financial plan. And that is absolutely true. It ensures that your other financial goals, like your children's education, your family's home, are not jeopardized if the unexpected happens. Okay, very, very true. Very important. We can explore options that fit within your current budget while still providing essential protection. Sometimes a smaller amount of coverage now can provide significant security without impacting your other priorities. And when they say a smaller amount of coverage, that could be like let's say a smaller IUL that, if you have it for 10, 20 years, that death benefit is going to start increasing as that cash value increases. So it may not fit today, but it's going to do a lot better in the long run. Okay, so those are just some, 5 or 6 common rebuttals. Hopefully you can use that information to help, guide your clients and any leads that you have to overcome. And just some of the key principles for the rebuttals. You obviously want to empathize. You don't like me. I don't really say what you're thinking. Where you go, oh geez, I hear this all the time. So empathize, acknowledge the client's feelings and perspective, clarify. Ensure that that they understand the underlying reason for the objection, educate them, provide factual information, and address any misconceptions. Focus on the benefits, highlight how life insurance solves their problems and provides security. Offer solutions, present alternatives or ways to overcome the objection. Keep it concise, quick, simple. Don't overwhelm the client with too much information at once. Just to kind of talk about that for a second, don't send your client 25 different quotes. I'll get agents that say, run me, every possible scenario that you have. And that's just going to overwhelm the client when they see 25 different quotes in front of them. You want to keep it down to maybe 2 or 3. If you need to expand from there, then we can go ahead and do that. But definitely don't want to overwhelm them. And then lastly, maintain a positive attitude. Your confidence can certainly be reassuring. Even if you don't get that client right then and there, a lot of times, I've had stories from agents where they say, because you were so calm and so positive and sympathetic, that client called you back a couple months later and wound up purchasing insurance. Okay. So lots of good stuff in here. Again, I'm going to send everybody a copy of all these slides, and you'll see that you have the drop ticket, you have the needs analysis, you have the life insurance fact finder, and you also have these life stages. And this is something I didn't talk about, but this is also attached to the slides here. And this just kind of talks about, like, if you have clients that are in their 20s and 30s, or their 40s and 50s, 60s, 70s, what type of life insurance is most likely going to be what they're looking for because of their age and things like that. So obviously the older clients, want to make sure that they have some sort of long-term care protection or, final expense for their funeral expenses, whereas younger couples, getting the term insurance and maybe a combination of universal life, really going to set them up for life because, the premiums will be a lot cheaper and most likely, they're going to be more healthy while they're in their 20s and 30s. So just some tips that you guys can take off of that. I actually took this from Protective Life, which is one of our top term and universal life carriers. So, all right. Well, I certainly appreciate everybody taking the time today. I know I kind of went on for a while, but I think this is very important information for everybody. I once again thank everybody for taking the time. I hope you all have a great weekend, and we'll be sending a follow-up email within the hour with a copy of all the slides for everybody. Thank you all so much. Have a great rest of your weekend, and look forward to hearing from you. Thanks again, everyone.